On March 19, 2026, the NASDAQ 100 futures, the NQ, gapped down and dropped over 400 points to settle near 24,651. We are watching a textbook stagflation environment. When economic growth slows while inflation remains high, it creates a tape driven by headline whiplash that destroys undisciplined accounts. This breakdown moved beyond a standard technical pullback into a structural global trap. Relying on buy-the-dip instincts or trying to guess the news in these conditions leads to catastrophic portfolio losses. To understand why the market broke down, we have to look at the macroeconomic forces holding the global market hostage. First, the geopolitical shutdown of the Strait of Hormuz has triggered a global supply shock, sending Brent crude spiking to $119.13. With the core producer price index at 3.9%, the Federal Reserve is holding interest rates between 3.50 and 3.75%. This removes the possibility of rate cuts. This tug of war paralyzes the central bank. The Fed cannot step in to rescue tech stocks while oil is surging. We have to move from the global macro view down to the actionable price levels on the NQ chart. The upper boundary of today's trap is a resistance ceiling at exactly 25,250. This level crushed every early buyer who tried to push price higher. The lower boundary is the critical support floor at 24,394. Buyers must defend this level to prevent a freefall. Taking trades in the middle of this gap is emotional gambling. Market structure only exists at the edges. The tech sector is currently absorbing the heaviest damage, even as individual companies post record-breaking earnings. The 10-year Treasury yield has surged to 4.25%. This acts as an algorithmic headwind that suppresses growth stocks. The tape is looking past the strongest micro news. NVIDIA projected a $1 trillion AI order book, and the market still refused to reward the stock. When yields and oil are both spiking, individual company fundamentals lose their ability to move the index. Surviving stagflation requires replacing reaction with a rigid, rules-based execution system. Our system focuses strictly on the 24,394 floor. We enter with predefined risk parameters and a tight stop-loss. Tomorrow's open is a binary trigger. We execute the bounce if the floor holds, or step aside if it breaks. Maintaining this discipline when the market feels chaotic is a challenge when you trade alone. Professional mentorship and one-on-one coaching provide the mechanical perspective needed to stay objective. In a stagflation market, survival depends on mechanical execution rather than emotion. The macro environment is the trap, but these defined whiteboard levels are the map-out. Join us in the live room at CIYcapital.com to prepare for tomorrow's opening bell with a professional community. True capital protection starts with preparation. Manage your risk, and I will see you in the live room.